Good evening, good morning. Welcome to the Black Bull Markets trading floor live here in Auckland, New Zealand. A very interesting 24 hours in the market, and we're here to digest some of the moves that have happened in commodities, FX, the political realm, and also with central banks around the world. First things first, what I want to touch on is oil. If we turn your attention to the chart here, you can see oil had plunged pretty heavily last night. You see crude falling off the back of further trade tensions between OPEC as well, who are forced to pressured rather to increase output from the US. And you're seeing a fall across commodities actually, also rhetoric to the trade war concerns that are ongoing. Really commodities suffering over the last 3 or 4 weeks now. And that's causing a bit more of a spur for the US dollar. The lull in the whole US-China trade war hasn't really lasted long, and conflicts have continued to escalate. Investors' concerns have continued to grow, and you're really seeing this play out in the market. Some interesting things to have a look at really is that you see this fall here. A lot of oil traders are looking for fundamentally for oil to be priced a bit higher, but this fall is not really helping the producers there. The S&P 500, on the other hand, last night, just pull up that chart, that ended a rally yesterday, with the longest weekly or rather monthly rally in a while, over the last 3 or 4 weeks. Ended that recently with that top there, and it fell around 171 points. I think it was just less than 1%. However, the futures so far, you're seeing a bit of a rebound from that. So the Trump administration, the tariffs, they're looking at placing an additional $200 billion worth of tariffs on Chinese products. Of course, China have said that they're going to retaliate, and what we've seen on the back of that, metals, commodities really holding the brunt of that. The FX realm, FX traders are really not knowing which way to lean. Comes to either seeing which ways the trade wars will result, even amid everything that's gone on. Swings in major developed currency markets have really remained pretty muted over the last few days, and opinions been divided. You're seeing tensions escalate a lot over the last month or so with regards to Trump's reaction more recently in NATO and how he's pretty much being perceived around the developed world. We look at a few interesting currency moves over the last day or two. Turn your head firstly to dollar yen. If you had followed my colleague Philip's video yesterday, he analyzed the pair, and what you could see is probably the largest rally we've seen in about 6 months. We switch over to a weekly chart. We're approaching the 112.50 level. We've got an area of confluence there around the 113.30. So a really strong bullish move this week, and that again comes off the back of the falling commodities and an equivalent correlated increase in the dollar. The dollar seemingly seeing to be the safe haven amongst all of the concerns that are going on as of late. So again, like it or not, like Trump or not, like his policies or not, whatever he's doing has been rallying the dollar. The dollar is getting stronger across the board, and you're really seeing this play out here with a weaker yen story, and that's probably one of the biggest gainers in the FX world with respect to dollar broad strength. Also, markets, what they're really looking out for is any further trade headlines. Our research team thinks that China will be looking to continue to retaliate, moving up a tit for tat approach on their retaliation policies, as it were. You had good PPI data come out above expectations yesterday, which again helped this rally. Switching over to more domestic talks with the pound. You're looking at later on today, Prime Minister May releasing her white paper proposal, outlining potentially more looser financial service arrangements with the EU, in line with finalising the Brexit arrangements following two key resignations from David Davis, who's been leading the Brexit negotiations with the EU Parliament, and of course the Foreign Secretary Boris Johnson, who's is a pretty key figure in her cabinet, now also been replaced there. So watch out for moves in the pound. Again, it's been pretty volatile, but as of late, it's operated within this range between 130, 134 mark. I mean, if you're looking for a break, it could really go either way, but you're kind of still at the bottom end of the range here, around the 131, 132 mark. You're seeing, resistance come in right about there, 134.75. So if there is a bit of good news or any sign that traders should get back into the pound, or investors putting their money back into the pound, any spur of confidence of a resolution to Brexit, you could see a move to the upside in that very soon. Turning your head over to Turkey now, recently, of course, President Erdogan was re-elected as Prime Minister, or the leader of Turkey. Of course, Turkish lira has been in a weakening pattern over the last 3 or 4, 5 to 6 years actually. This is the dollar against the tree here, and again Erdogan looking to loosen up financial policy, looking to reduce interest rates, which in an economic term creates a further divergence from what the US and pretty much every other central bank are looking to do, which is to hike. So you saw the lira again weaken to historical lows. Against the dollar, it weighed in just under 5, under the 5 mark there, went up to 4.96151. I believe that's the high. The high print was 4.9743 overnight, due to the headlines of the potential interest rate decrease from Turkey, which again looking to spur a developed nation not quite catching par to its prospective growth pattern, or its in fact capacity of growth in a nation that pretty much joins Europe and Asia together, as well as the Baltic nations too. So a key geographic location there for trade, as well as economic opportunities. And it'll be interesting to see what happens there with the new finance minister being appointed, who's actually the son-in-law of Erdogan. Last but not least, let's have a look at the dollar CAD. Now, in line with expectations, the Canadian Bank of Canada went ahead with increasing their interest rate to match the Federal Reserve hike a few weeks prior to that, from 1.25 to 1.5%, so 25 basis points. And you saw a bit of a reaction there in dollar CAD, strengthening about 80 points within an hour period, and then very soon after, pretty much losing all of its gains, and the dollar came back, rebounded, and created a new high, which shows you, the bulls are really on the side of this trade here with dollar CAD, operating above the 250-day moving average, and you've been operating above there since March on the daily chart. A lot of bullish momentum in this pair. I mean, I'm personally, the Canadian dollar has really been hit hard with the trade tariffs placed on the neighbors from the US, and if you think in June it was around the 121 mark, and if you go back even further than that, 5 years ago, we were almost at parity between the dollar and the Canadian dollar. Now it's about 31% weaker. it's a real weakening of the currency, especially of two close trading neighbors. So it's a pretty interesting dynamic. Whereas if you look at the Aussie Kiwi, on the other hand, which are two, albeit smaller GDPs, but of equal importance for trading, it usually stays pretty constant around just above parity mark, or in between 1 to 110 range. So it's interesting to see how that will play out over the next month or so. The research points to a further hike from the Canadian Central Bank next year, January, barring any major negative trade developments. So key pairs to watch today: cable, pound dollar, with in light of the white paper being released today. Also keeping your eyes on WTI, which had that pretty nasty tumble yesterday. Potential reversal on the cards there. Also dollar yen, which, following on from Philip's video, continuing to make further legs higher. It's a daily chart. Look at the strength of that candle, and that's your 4-hour chart continuing to climb higher. You walk on onto a weekly chart, you've got a space for potentially another 100 to 120 points further to the upside before you see any form of resistance. So dollar yen is a very interesting pair that we're keeping our eyes on here. Turkish lira, exotic cross, formed a big high yesterday following the news. Again, looking to possibly reverse that move from yesterday in terms of reversing those losses as sellers bring it back to a more of an equilibrium level. And then finally, dollar CAD, which experienced that move yesterday. However, dollar remains bid across the board. Commodities remain weak. Gold remains flat, which is another interesting dynamic we'll probably save for another video. But if you've liked this video, please do hit the subscribe button below to keep in tabs with more great videos in the future. And safe trading. Wish you all the best from Auckland, New Zealand, Blackpool markets. Take care.